Have you ever thought about having money dripping into your account every week without having to work more hours or start a business? And what if I told you that this is possible using dividend ETFs, without the headache of picking stocks one by one? If you're just starting in the investment world and everything seems too complicated or risky, this video is for you. Today, I'm going to show you how to build a weekly cash flow in a simple and safe way, even if you're just taking your first steps in the market. If you want to learn how to generate a predictable extra income, build your wealth intelligently, and, on top of that, gain more financial freedom, stay with me until the end. I'll explain everything step by step, in a straightforward and uncomplicated way, so you can use dividend ETFs to your advantage and start making money work for you. Shall we simplify this together? First, let me quickly and simply explain. What exactly are these dividend ETFs? Think of it this way. Instead of choosing a single stock to invest in, like one specific company, you buy a basket filled with high dividend-paying stocks. This basket is the ETF. It's a fund traded on the stock exchange that does all the work of selecting solid companies that regularly distribute dividends. The cool thing is that by purchasing just one ETF, you're already diversifying and reducing risks without any complications. It's like wanting to buy fruit, and instead of picking just one apple, you get a basket with apples, bananas, grapes, and oranges, meaning several good options all at once. And the best part, ETFs already make these selections for you, and in the case of dividend ETFs, they prioritize companies that pay out part of their profits directly into your account. If this is making sense, drop a comment below saying, "I want passive income." Now, many people think that investing in dividends is only for those who have a lot of money or understand everything about the market. And I'm here to tell you, that's a myth that needs to end today. Do you know why? Because with dividend ETFs, you skip the hard part and go straight to a simple and effective strategy. You don't need to spend hours selecting stocks or become a financial analyst. It's like using a GPS to get to a destination instead of trying to memorize the entire map. The ETF takes you down the safest path without the hassle. And most importantly, you don't need a fortune to start. With small contributions, you can already see results and feel that great satisfaction of watching money come in. Take this opportunity and subscribe to the channel right now if you want more simple and practical tips like this, okay? Now, let's understand how to create a weekly cash flow with dividend ETFs. You've probably heard that dividends only get paid once every quarter, right? But the truth is, with a good ETF strategy, you can have dividends dripping in every week. Here's how it works. There are several ETFs on the market, and each one has different dividend payment dates. When you choose and combine ETFs that pay on alternating weeks, you create a weekly cash flow, almost like an extra salary arriving in your account multiple times a month. Let me give you a practical example to make it clear. Imagine that ETF A pays dividends in the first week of the month, ETF B in the second, ETF C in the third, and ETF D in the fourth week. The result? Money coming in every single week. Now tell me, have you ever thought about starting the month knowing that on any given Friday, you'll have money landing in your account? If you like this idea, hit the like button and keep going because there's more to come. Now let's go step by step on how to build your dividend ETF portfolio. First, you need to open an account with a brokerage firm. Choose one that's beginner-friendly, with no hidden fees and an easy-to-use platform. Once that's done, step 2 is to research and select good dividend ETFs. Here's the secret. Look at 3 main factors: consistent payment history, diversification across sectors, and liquidity, meaning how easy it is to buy and sell that ETF. Then, move on to step 3. Combine at least 3 or 4 ETFs that have different payment dates. That way, you guarantee your weekly dividend flow. In practice, this means checking each ETF's payment calendar and selecting the ones that complement each other. Step 4. It's time to make your first investment. Start small. What matters is taking the first step. And finally, step 5. Automate your monthly contributions and reinvest your dividends. This speeds up the compounding snowball effect and makes your passive income grow even faster. All of this, without having to become a trader or spend hours studying the market. Now, before you go all in, let me tell you about the most common mistakes beginners make and how you can avoid them. Mistake number 1. Thinking you'll get rich quickly with dividends. This is a long-term build. It's a marathon, not a 100-meter sprint. Mistake number 2. investing without checking if the ETF has a solid history of consistent payments. You need to make sure the fund actually delivers dividends regularly. Mistake number 3. Putting all your money into a single ETF or sector. Diversification is key. Remember the fruit basket? You can't just buy apples. You have to mix it up. Another classic mistake: forgetting to reinvest dividends. Many people withdraw and spend them, but if you reinvest, the snowball effect grows even faster. And the last mistake: lacking patience. In the first few months, it might seem like your passive income is still small, but with time and automatic contributions, the results appear and grow solidly. A common question I get: what's the difference between dividend ETFs and individual dividend-paying stocks? This is a frequent doubt. While individual stocks give you more control, they require more time for research and analysis. ETFs, on the other hand, simplify everything because a professional manager makes those selections for you. And there's more. With an ETF, you spread out the risk since you're investing in multiple companies at once. If one or two perform poorly, the others make up for it. With individual stocks, if that company has problems or cuts dividends, your cash flow could be directly affected. And of course, ETFs tend to be less volatile due to diversification. So if you're just starting and want convenience, ETFs are the best choice. Did you like this comparison? Then hit the like button and let's move on. Another important point is understanding how dividend ETFs behave in different economic scenarios. In times of rising interest rates, dividend-paying companies and the ETFs made up of them tend to be more resilient. That's because they are usually well-established companies with solid cash flows. In times of crisis or market downturns, ETF diversification helps protect part of your portfolio. No investment is completely risk-free, but dividend ETFs have a history of holding up better in turbulent markets. That's why they're highly recommended for those who want to start investing safely. Now let's talk about the magic of compound interest in this strategy. When you reinvest the dividends you receive, you buy more ETF shares. With more shares, in the next dividend cycle, you receive even more. This creates a snowball effect that strengthens over time. If this step-by-step guide is making sense to you, subscribe to the channel because there's more to come. And as a bonus for sticking around, I'll show you a practical simulation of how this strategy can work in your life. Imagine investing $100 per month in 3 dividend ETFs that pay on different weeks. Over a year, with consistent investments and reinvesting your dividends, you'll have created a mini weekly income stream. If you're ready to see money coming in every week, type in the comments, "I want my weekly income." Another point that will motivate you even more is thinking about the long-term impact of this strategy. Now imagine that you follow this routine of investing 500 Brazilian reals per month, reinvesting everything, and staying disciplined for 5 years. During this period, with dividends growing and compound interest working in your favor, you could have built a significant portfolio, generating a considerable passive income every week, possibly covering small fixed expenses in your daily life, like groceries, electricity, or internet bills. All of this just with the money your ETFs are paying you weekly. And the most amazing part is that this strategy works both for those who are just starting out and for those who already have a substantial amount invested and want to turn it into a predictable cash flow. It doesn't matter how much you start with, the key is consistency. From now on, every dollar you invest will be working for you. And many people ask me, but does this really work for any type of investor? The answer is yes, with one condition. This strategy is perfect for those looking for predictability and who like the idea of building a solid foundation before moving on to riskier investments. In fact, even more experienced investors use this weekly cash flow strategy with dividend ETFs as part of their portfolios to ensure a steady income while also investing in more volatile assets. So whether you're just starting or have been investing for a while, this tactic can serve as both the foundation of your financial freedom and a complement to other wealth-building strategies. Samantha, a 26-year-old from Chicago, never imagined that her life would change drastically after a casual conversation during a company lunch. At 23, she worked as an administrative assistant, earning just over $3,000 per month and spending almost everything on rent, bills, and weekend outings. That day, an older colleague mentioned how he was using dividends to create an extra monthly income without working overtime or changing jobs. Curious and a little skeptical, Samantha went home and spent the night researching dividend investing. For the first time, she realized there was a path beyond the routine of work, pay bills, and repeat. She decided that she wanted to learn more and give it a chance. The fear of making mistakes or losing money was real, but the fear of spending years in the same situation without progress was even greater. Samantha opened her first brokerage account and started with just $250 per month, investing in dividend ETFs recommended for beginners. She split her contributions across 3 different funds to ensure a more consistent income flow throughout the month. At first, the dividends were symbolic, just $5 or $10 appearing here and there. But instead of getting frustrated, she decided to focus on the long term and remained disciplined. While her friends bought expensive clothes or planned summer trips, Samantha kept investing month after month, religiously, reinvesting every cent of her dividends. She also started consuming personal finance content, learning how to control expenses and avoid unnecessary debt. Over time, her perspective changed. Every dollar saved and invested was a seed planted for her future freedom. 2 years later, at age 25, Samantha had already accumulated about $20,000 in dividend ETFs and stocks of solid companies that paid regular dividends. What surprised her the most was seeing the effect of compound interest. Her monthly dividends had already surpassed $300 and were starting to cover basic bills like water, internet, and even part of her rent. Seeing her money working for her gave her an unprecedented sense of security and independence. Samantha realized she was creating an automatic system. Her money was generating more money, and she no longer had to rely entirely on her salary to maintain her lifestyle. Her confidence grew each month, and her strategy was becoming stronger and smarter. At 26 years old, with over $50,000 in income-generating assets, Samantha realized she could take a bold step, quit her job and live solely off passive income. Were already bringing in about $1,200 per month, enough to cover her living expenses since she had reduced costs and adopted a more minimalist lifestyle. Additionally, she started doing freelance work and occasional consulting to supplement and accelerate her investment growth even more. The freedom of no longer depending on a fixed salary was transformative. Now, Samantha could work from anywhere and on her own schedule, without the burden of the traditional office routine. Today, Samantha travels frequently, lives in different cities across the U.S., and continues reinvesting part of the dividends she receives. She also shares her story on social media to inspire other young people to start investing as soon as possible. Her monthly dividend income keeps growing, and her portfolio continues to expand. More important than the numbers, Samantha has gained the freedom of choice. She can decide where to live, when to work, and how to use her time. The lesson she always shares is simple: if I started with little, anyone can. The difference is in discipline and believing that it's possible to build consistent passive income over time. And to wrap up today's content, I want to reinforce something that will change your mindset about this strategy: the power of seeing every weekly dividend as a small victory in your financial freedom plan. Every time a payment hits your account, it's a reminder that your money is working for you, without you having to trade your time for it directly. This is the first step to breaking the cycle of relying solely on a salary or a single income stream. It starts small but keeps growing. Over time, what seemed like just symbolic money can turn into an important boost to your quality of life. So, let's put this strategy into practice. And if you've made it this far and enjoyed the content, do me a favor. Share this video with that friend or family member who also wants to create passive income but keeps saying they don't know where to start. It will be a huge push for someone who needs it. And of course, let me know in the comments what questions you still have or which step you're going to start implementing this week. Stay tuned, because in the next videos, I'll bring more simple, straightforward strategies that actually work in the real world to help you accelerate your journey toward financial freedom. See you in the next one.